Imagine this. You wake up in 2024 and find out that you have to sell everything you own. Your house, your car, your stocks, your gold, your crypto. Why? This is not a nightmare. This is a reality for millions of Americans who are facing the biggest wealth transfer in history. The US economy is undergoing a major transformation in 2024 as the banking sector faces unprecedented challenges and the aftermath of the 2023 crisis. These events have destabilized the financial system and the foundations of the economy. Millions of Americans are at risk of financial collapse. The outlook for 2024 is bleak, with recent developments causing alarm across the country. The situation is full of difficulties and the future is uncertain and daunting. Many Americans are unable to pay their debts, including credit cards, car loans, and student loans. The end of the federal student loan moratorium is making things worse. The government's efforts to provide relief may not be enough. The Basel III Endgame plan, which aims to increase the capital buffers of major banks, may reduce the availability of credit. This is creating a shockwave in the financial environment. Because of these factors, it is estimated that about 100 million Americans may have to sell their assets in 2024. This is a worrying scenario, as it could lower the quality of life for many people and widen the gap between the rich and the poor. The US economy in 2024 is facing significant challenges. The banking sector, the debt crisis, and the financial regulations are creating a situation where many Americans may have to sell their assets. This could have serious consequences for the economy and society. Policymakers and financial institutions need to take action to reduce these risks and protect the financial health of American citizens. Some sources say that 2024 will be a year of high inflation, where prices go up faster than income and wages. This means that many Americans will have less money to buy things and live well. Many Americans also have a lot of debt, like student loans, credit cards, and car loans. These debts are hard to pay back because they have high interest rates and fees. The government has tried to help by stopping federal student loan payments, but this may not be enough to stop people from missing payments or going bankrupt. Some experts also think that the banking system will change a lot in 2024 because of the Basel III Endgame plan. This is a global rule that gives big banks more money and cash to deal with financial problems and crises. However, some critics say that this rule will hurt the economy because it will make credit harder to get, borrowing more expensive, and assets cheaper to sell. This could make the money supply smaller, prices lower, and the economy weaker. Because of these things, many Americans may have to sell their assets like stocks, bonds, real estate, gold, and cryptocurrencies to pay their debts, bills, or losses. This could make a lot of wealth move from the middle class and the poor to the rich and powerful, who may buy these assets for cheap prices. So, what is meant by the Basel III Endgame plan? It is a comprehensive set of reforms developed by the Basel Committee on Banking Supervision. These reforms are designed to improve the banking sector's ability to absorb shocks arising from financial and economic stress, whatever the source, thus reducing the risk of spillover from the financial sector into the real economy. The plan introduces broad, sweeping revisions to the existing regulatory capital framework for all banks, particularly those with assets over the $100 billion threshold. The proposed changes aim to enhance the strength and resiliency of the banking system, while also improving transparency and consistency in banks' capital frameworks across the industry. One of the key elements of the Basel III Endgame plan is the increase in capital requirements for major banks. This is expected to result in a 16% increase in common equity Tier 1 capital levels and a 20% increase in the risk-weighted assets for large bank holding companies. This means that banks will need to hold more capital to cover potential losses, making them more resilient in times of economic stress. However, these higher capital requirements could limit banks' lending capacity and impact their capital markets and trading activities. This could potentially disadvantage global banks domiciled in the US and create competitive benefits for non-bank financial institutions. For the first time in the history of Basel rulemaking, the regulators have shared estimated impacts from proposed changes. This is a significant step towards greater transparency in the banking sector. Despite these changes, the Basel III Endgame plan has raised some concerns. The deviation from international Basel framework could lead to significant operational burdens for the largest US banks, which will have to maintain parallel calculation and reporting systems for significant jurisdictions. The Basel III Endgame plan represents a significant shift in the regulatory landscape for the banking sector. While it aims to enhance the resilience and stability of the banking system, it also presents new challenges for banks, particularly in terms of increased capital requirements and operational burdens. Thirdly, the Basel III Endgame plan could lead to operational burdens for the largest US banks, which will have to maintain parallel calculation and reporting systems for significant jurisdictions. However, it's important to note that community banks and smaller regional banks wouldn't be directly affected by the Basel III Endgame plans. While the Basel III Endgame plan is primarily targeted at large banks, it could also have indirect effects on small banks. These effects could come in the form of changes to the competitive dynamics of the banking sector, potential decreases in the availability of loans, and an uneven playing field due to operational burdens placed on large banks. As such, small banks will need to closely monitor these developments and adapt their strategies accordingly. The US economy is currently experiencing a combination of progress and obstacles. The gross domestic product, an indicator of the economy's health and size, draws a 4.9% annual growth rate in the third quarter of 2023. The uptick in consumer spending and inventory investment largely drove this growth. However, the economy is grappling with inflation, which is the rate at which the prices of goods and services are rising. The inflation rate reached 6.5% in December 2022, surpassing the Federal Reserve's 2% target. To combat this high inflation rate, the Federal Reserve has increased interest rates 7 times in 2022 and once more on February 1, 2023. The unemployment rate showed a positive trend, dropping to just 3.9% at the end of 2021 from 6.4% at the beginning of the year. This suggests that more individuals are securing employment, which is a positive development for the economy. However, there are some concerning trends as well. The US current account deficit, which is the difference between the total export of goods, services and transports and its total imports, decreased by $16.5 billion or 7.6% to $200.3 billion in the third quarter of 2023. This indicates that the US is importing more than it's exporting, which could pose challenges to the country's economic stability. While the US economy is showing signs of growth with an increase in GDP and a decrease in unemployment, it's also facing challenges such as high inflation and a large current account deficit. These factors make the current economic condition in America a complex mix of growth and challenges. The global economy is currently going through a period of significant challenges and uncertainties. The International Monetary Fund has forecasted a global growth rate of 3.2% for the current year, but it has lowered its projection for the following year to 2.7%. The prices of goods and services are going up faster and longer than expected. This is called inflation, and it's a big problem for the world. Inflation is supposed to reach 9.5% this year, and then go down to 4.1% by 2024. But the high prices are making life hard for people, especially people experiencing poverty who have to pay more for food and energy. The economy is not doing well in the 3 biggest countries, the United States, China, and the Euro area. The United States will have less money and credit to grow, and its economy will only increase by 1% next year. China will also have less growth and only 4.4% next year because its property market is weak and people are still locked down. The Euro area will have the worst slowdown, with only a 0.5% growth in 2023 because of the energy crisis that is hurting its businesses and consumers. You thought you were safe. You worked hard, saved money, and invested wisely. But in 2024, everything changed. A secret plan, a debt crisis, an inflation disaster. Suddenly, you had to sell everything you owned. What do you think? Comment your thoughts on this, and don't forget to like, share, and subscribe.